This morning, we had a 6.3% sell-off from all-time highs in the NASDAQ 100. And in fact, I saw more negative headlines today and yesterday than I saw during the tariffs crash. We're going to talk about exactly what happened with this market downturn and where exactly I think the market is going next. In fact, I will be talking about positions I'm adding, also a 40K leaps position that I took yesterday, and one stock that I will not be adding to the portfolio. So let's go ahead and dive right into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if we log into the account, you can see we're right under all-time highs in the portfolio, despite the pullback that we had. And if you do want to follow me on my 8-figure journey and you're not subscribed to the channel, please be sure to subscribe by clicking that button down below this video. Also, if you get any value out of this video, please give it a thumbs up, as I highly appreciate it and I appreciate you being here. So let's go ahead and dive into the realized gain loss. It's Friday. I always show realized gain loss for the month and the year. But the current month, currently we are up 15K in options premiums. Now, results vary month to month and year to year, but I'm not the only one doing it. As you can see here in my private mastermind, Options Trading University, we have clients sharing their inspiration. As you can see here, obviously results vary based off account size and risk tolerance, but it's awesome to see people sharing their inspiration here in the group. We now have 619 members here in the group that I work one-on-one with. And if you do want access to my Ryan's Trades channel and my leaps entries and exits, that'll be at the top of the description down below this video. I do give away free trade ideas as well on my Instagram right here, and X account, and my free newsletter. All three of those are down below in the description. So make sure to be subscribed to all those because they're absolutely free. But let's go ahead and dive into it. Okay, we're seeing headlines like this. AI companies admit they're worried about an AI bubble, right? We saw this all over the news yesterday. In fact, millions of people probably got liquidated this morning at the bottom when QQQ hit 597, all right? And this is going to happen many times during this bull run. But I'm going to explain exactly why it doesn't pay to be bearish on this market, okay? Because most people that are bearish are not understanding the current environment we are in as far as an interest rate cutting environment, okay? In fact, Warren Buffett just revealed his new position in Alphabet. This news just came out, okay? He had making Google parent the conglomerate's 10th largest equity holding at the end of September, okay? $4.3 billion stake. If Warren Buffett, sees value in AI and he's investing in Google, obviously, it's probably not an AI bubble just yet, okay? So just based off of that, let's talk about exactly why I think the market is headed much higher from here, okay? It's because I understand money supply. I understand what pushes these markets up and what brings them down. Every single bear market we have been in was spurred by increasing interest rates and basically the Fed not printing any more money. So how does more money get created? How does more US dollars get created? It gets created by debt, US Treasuries. And who buys those debt? Who buys the US Treasuries? The Federal Reserve, okay? Also, many other people, nations, countries, stuff like that, but the Federal Reserve puts US Treasuries on their balance sheet. And if you look at this, okay, Fed officials called time on their 3-year quantitative tightening program on Wednesday, and this was released October 30th, okay, acknowledging that the central bank was soon likely to return becoming a substantial buyer of US Treasuries, okay? If we scroll down, it said, Casagari added that he expected net purchases of $35 billion of treasuries a month, including the Fed's $6.6 trillion balance sheet by about $20 billion a month. All right, so those purchases will help assure investors who have become worried about the US's ability to finance its debt payments. More buyers for the bonds should push down yields, making the debt cheaper. So what does this mean, okay? In simple terms, the Fed is going to be buying more US Treasuries starting at the beginning of next year, okay? And what that's going to do, it's going to push the yields down, or the borrowing costs, the benchmark borrowing costs, right, in which people can borrow from banks, right? Consumers, businesses, right? And what that's also going to do is it's going to increase money supply. So if you take a look at the Fed's balance sheet, okay, of US 10-year treasuries, it's increasing. Okay, and there's periods where, they weren't buying any, they were just kind of keeping their balance sheet level. And then there's periods of increasing their balance sheet with US Treasuries like back in 2021, okay? And then it kind of tapered off into the recession, the inflation-reduced recession, and now it looks like they're increasing their balance sheet again with US Treasuries. Now, if we look at the M2 money supply, okay, this is stuff that's working in the background while, these news outlets are pushing fear and being fearmongers. This is actually what's happening. There is more money in circulation than ever in history. They're just printing money. As you can see, $22.2 trillion in circulation September 2025, okay? And this number is increasing and going up. In fact, if you look at money market funds, how much funds are sitting on the sideline right now, all-time highs, $7.4 trillion. Okay, so with all of that being said, increasing money supply, increasing money market funds sitting on the sidelines, right? The Fed purchasing US Treasuries. Next year, they're going to be increasing their balance sheet, pushing yields down so that interest rates come down. Well, where does that money go? Eventually, it flows into assets, including the stock market, including real estate. We saw this happen back in 2021, okay? So if we take a look at the 10-year Treasury, the yields are trading at around 4%, okay? I expect these to go a lot lower. Now, if we switch this to the weekly time frame, to where we're looking at each candlestick as a week, you can see that back when we had, an awesome bull run back here, all the way from 2008, right, when we had the financial crisis, all the way to 2020, those yields kept coming down, okay? They kept coming down. When yields come down, interest rates are lower, banks and consumers can borrow at cheaper rates, and money flows into the stock market, right? And then what happened in 2022, right? Yields went up, okay? And when yields go up, that's not a good thing. They're sucking liquidity out of assets, out of the markets, right? And things are more expensive to borrow, right? It's more expensive to take out a loan for businesses and consumers. So my expectation is that, the Fed's going to continue cutting rates and these yields are going to come down, probably sub 3%. Okay, this is kind of my target, this 3% area by 2026. All right, so with that being said, we could look at the CME FedWatch tool to kind of confirm, are we getting interest rate cuts? Is there going to be more money flowing into the stock market? Yes. In January, 84% odds we're going to get that interest rate cut. In June, 89%, right? And then potentially another one in October. So 3 next year and potentially a 4th one in 2027. Now, could this spur inflation down the road? Yes, but we'll deal with that when it comes, okay? So right now we have to play the price action. So let's take a look at QQQ, all right? We're gonna go back to the charts and we'll switch this over and we'll talk about the markets and kind of what exactly I'm expecting in the short term. So if we take a look at the markets, right? Bitcoin, in fact, I want to look at. Bitcoin is really taking a hit right now. It looks like it wants to go all the way down to this $87,000 area, which is a big trend line support, okay? And I think that will happen in the short term. But QQQ had a nice rebound today, right? We kind of bounced off that 600 area. We headed back up, right? And are staying within this nice channel that we've created since the tariffs crash. Now, I expected us to go all the way down here to 588. That would have kind of been a triple bottom per se, because we hit it once here, right? And that would have been a third time, and then maybe we head up from there. But buyers stepped in, right? Buyers stepped in, and we had a large volume of buyers, as you could see this volume candlestick right here. And that was pretty bullish. So with that being said, okay, now I'd like to take a look at VIX. Now the VIX closed under 20 today. That's exactly what I wanted to see for the market to potentially continue higher on Monday. Now, obviously anything could happen over the weekend. President Trump can tweet something, sending the markets down a little further, and we could look at that, 588 area again. But odds are we're probably headed higher from here, okay? Because this right here was a perfect opportunity this morning for people to just get out, take profits, take risk off the table, and just, let this crash happen, but it didn't. So, my thesis is that we're probably headed higher from here. We probably chop around a bit here, and then maybe we, start going up more aggressively. So, and staying within this channel. So that's kind of the, prediction there. VIX in the 19s. I think we could head probably a lot lower from here. Maybe we head back down into the 18s, back down into the 17s by mid next week with a little bit of a run. So with that being said, I made a lot of adjustments today in the portfolio. So let's talk about all of the stocks that I'm currently adding. We're gonna actually address the one that I'm not adding, and I'm actually actively trying to get out of my shares in the short term, not because I don't like the company, but just because the price action is not looking good here. So number one is HIMS, okay? HIMS is something, this stock has just had quite a rough run here. Now, I still like the stock long term. I do think it's a great company. It's profitable. PE ratio is at 68. So ideally, we should be buyers here, but I want to see some sort of consolidation first, all right? So I'm giving myself a chance for this thing to come down to 33, and I think it will. There's this long-term trend line that's been holding, and I want to see this type of action, just some consolidation, some buyers stepping in, right, before we head back up. So I may give it a week or two before adding to the position, but for right now, I'm keeping the position very small, 400 shares. I just want to see kind of what news can come out to really boost this stock. They did just release labs, which is great, but it doesn't look good that Andrew Dudum keeps moving around shares to his trust to potentially sell off. That's not looking too hot. But long term, I think this, as long as we could keep this 33 area, which I'm going to be taking a close look at, right? If we bounce down there, as long as it holds, then I think HIMS will be fine long term. I think we'll bounce back up, right? Get the shares called away at 50. I have shares here at 50, right? Get those called away, start selling some more cash secured puts and building up that position again. But I want to see what happens around this area. So it's going to be quite an exciting time and moment for HIMS to see if the stock can really kind of hold here and perform long term. But let's go ahead and jump into the stocks that I'm actively adding and building up my positions in the portfolio. So Palantir down 21% from all-time highs today. Massive discount in my opinion, and I really like this stock. It has wonderful fundamentals, right? They came off the strongest earnings ever. Free cash flows are higher than ever, right? And this is a stock that, yes, PE ratio is still high, 406, which is a lot lower than before. That we were up in the high 600s, even 700s not too long ago. But, it's a strong stock going forward. One of those unicorn type stocks where, hey, this thing could be a 500, 800,000 PE ratio stock, but still be a $1 trillion company. So that's my expectation. So what am I doing here? We're at the lower Bollinger Band. Let's go ahead and dive into the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary, but if we take a look at the account, okay, you could see that we're pretty low in cash, 163K, roughly, a little over 11% in the portfolio. So, I went kind of heavy. So Palantir, we built up the position to one of my largest positions. In fact, it's my second largest position in the portfolio because I'm very bullish on companies that have great earnings, okay, especially in today's times. They're a lean company. They don't have too much overhead, right? And this is exactly what I want to see. So big position, I have the 177.5s that are in the money, 175s, 160s, and 170s. So we have all types of strike prices. Now I sold all of these cash secured puts to collect about $5,300, okay? Now, if I were to enter a new position, I would just go out to next month, December 19th, just go out 35 days, okay? And I'd be pretty aggressive here. I'd go close to the 30 delta, so the 160 strike to collect $600 for a potential 3.98% ROI. I love that return there. Obviously, results vary based off where the stock's at, but that's a very safe level for me because 160 would be, let's see, all the way down here, okay? And if the stock did go down there from all-time highs, and I got to sign the shares, that would be a 23% discount on the shares, okay? So again, the stock would have to go below 160 in 35 days by expiration for me to get assigned the shares there. But I like that strike. If I wanted to be even more aggressive, I could go 165 for a potential 4.9% ROI. So Palantir looking really good, very strong fundamentals, and down quite a bit here at the lower Bollinger Band. So this is a wonderful opportunity, even a potential leaps opportunity. But we'll get into the stock that I did leaps on in just a moment, okay? The next stock is going to be CLS. This stock down 24% from all-time highs. It's very rare that we see CLS down this much close to the lower Bollinger Band. It only happens every couple months. Okay, so this is one of those opportunities, and I loaded the boats here. So bounce right off that 50-day moving average today, and let's take a look at the portfolio. So if we go to CLS, you could see the largest position in my portfolio, 210,000. I have the 305s, the 300s, and the 290 cash secured puts to collect about $5,900 in premium. And if I were to put on a new position, again, I would just go out mid-December, okay, 35 days, just to give myself ample amount of room to be right. And I'd probably go around the 30 delta. So I'd go to 280, okay, I'd collect about $1,600, and that's a 6.5% potential ROI, okay? So the returns are even greater here in CLS. And, that's why it's one of the biggest positions, because fundamentally this company has a 50 PE ratio, and they manufacture all the hardware and switches for all these AI data centers that are going up. So one of the best companies in the portfolio. If you look at the chart, it just speaks for itself. Wonderful upward trending, not too volatile, and great premiums in the cash secured puts. Okay, so love CLS. That's going to be the second one. The next one I added more of was Iren. Now, Iren's probably the highest risk position in the portfolio just because it's so new. They just went profitable as far as having 4 profitable quarters, so it has a positive PE ratio. PE ratio is a 23. I don't know how it's that low, but obviously they had 160% net margins on their income this past quarter, and we're down here at the lower Bollinger Band. So good entry right here. I got in a little bit early yesterday, so let's take a look at exactly where I got in. So the Iren position, I upped it to 72K. I told myself I would only do 50, but we upped it to 72 because I think this is a really good opportunity. My puts are in the money, so I might have to buy 100 shares in 7 days at $52. Totally fine with that, because I get assigned the shares, and if I wanted to collect some covered call premiums, right, I could go out 21 days, go well above my cost basis, and collect like 3 to 4% in 20 days. Okay, so that's what I like there. Obviously, results vary, but if I were to get back in, I'd probably go out for this one a little bit shorter, 28 days. Okay, December 12th. And I would go to the, 33 delta, okay? I like that area right there because I'm getting enough premium for the risks that I'm taking on this very volatile stock. So I like the 43 strike, collect 410, which is an 11.6% potential ROI. So you see why, yes, it is a volatile stock, but the premiums, compensate for that volatility. So 43 would be all the way down here, which would be pretty far from all-time highs, but not too far from where the stock's at right now. So let's kind of calculate that. From where the stock's at now, that would be about a 7.5% discount from current prices. But from all-time highs, it's about a 44% discount. So you're almost getting half off the stock at that level if it does continue going downwards. But I think we're going to see some upward momentum here as buyers stepped in today, equal amount as yesterday's sellers. And we're almost oversold on the RSI. So we typically see a slowdown in this. And I think that, maybe we have potentially one more down day, and then we slow down, and then we kind of rip back up here. So that's my expectation on Iren or Iris Energy. Wonderful company, positive PE, in fact, very low PE. It's in the Bitcoin mining and AI cloud space. So yes, it is being impacted by the Bitcoin price. And I think that's why it didn't perform as well today, down 4% versus all our other AI stocks are up, right? So once Bitcoin kind of levels out, maybe somewhere around the 85K area, that's when Iren will have a major push, okay? So that's kind of what I'm thinking there for Iren. But let's talk about the last position, which is also a very big one in the portfolio. And I added LEAPS call options. So Robinhood, probably one of the favorite stocks in the portfolio. It's very predictable and easy for me to trade. I just really like the movement on this stock. Every time it touches lower Bollinger Band, boom, goes back up. So Down 25% today from all-time highs. Wonderful opportunity to kind of get in there. So let's switch this over here. But as you can see, you know, kind of broke through this little trend line that we had here, but you know, it bounced back up. It kind of bounced off, broke through for a second, and then bounced back up to 122. Could we get a couple more down days? Sure, because again, Hood is correlated with Bitcoin as well, unfortunately, but the fundamentals on the company are very strong. So PE ratio is 50, right? We're close to oversold on the RSI, and I decided, hey, we're at the lower Bollinger Band. This is a good place to grab some Leaps call options. So let's go ahead and dive into the portfolio and show you exactly what I did. So we have Robinhood here. I have the 120s, sold some puts, 130s, 127s. We're in the money on those. That's totally fine. 14 days from now, probably not going to get assigned, but we'll see. Now, I did buy 10 115 call options for Jan 15th, 2027. So I gave myself ample amount of room to be right, just in case I have to hold on to these for longer, but I'll probably get out of them at 10, 20%. So we put 40K, paid 40K, and we're just waiting for these to pop back up. Only down 1% on these, but I think this was a wonderful entry, and who knows, maybe Monday would provide a good entry as well if you haven't gotten into those. But really like the Leaps options here. And again, my plan is, you know, let these bounce up probably around 130, somewhere around here, quick exit, boom, next week, quick exit. Maybe I sell half and then I ride the other half up here into the 140. So that's kind of the plan there. But Robinhood, amazing company. And I think this thing is going a lot higher in the long term. So if you enjoyed this video, please give it a thumbs up. I'll see you in the next update and take care.